Hello and welcome to the latest news update on Canary News.
The cryptocurrency market is experiencing heightened excitement following the groundbreaking introduction of Bitcoin ETFs. Now, 7 issuers are urging U.S. regulators to approve funds tracking Ether, the second largest cryptocurrency worldwide. However, the exchange-traded fund community, including those who previously navigated the approval process for Bitcoin ETFs, is cautioning against excessive optimism. Some issuers are refraining from entering the Ether filing competition due to concerns surrounding the token's legal ambiguity. They also highlight that the SEC's approval of 10 Bitcoin spot funds in January doesn't necessarily indicate a similar outcome for Ether ETFs, given the substantial differences in market infrastructure. The SEC faces a deadline of May 23 to respond to one of the filings, specifically an application from Van Eck. If denied, issuers still seeking approval may need to refile applications or contest the regulator's decision through litigation. Despite Ether's recent surge, with its value increasing by roughly 50% this year, concerns persist regarding its legal classification and market maturity. Bitwise, a crypto asset manager, is adopting a cautious approach, emphasizing the importance of engaging in meaningful dialogue with regulators before proceeding with an Ether ETF application. Similarly, Valkyrie's chief investment officer, Stephen McClurg, doesn't anticipate the arrival of a spot Ether ETF anytime soon, citing uncertainties surrounding Ether's legal status. The classification of Ether as a commodity or security by the SEC remains a significant hurdle for ETF approval. If deemed a security, additional regulatory requirements would complicate the approval process, potentially posing fatal barriers to an Ether ETF. Another crucial factor for approval is demonstrating the correlation between Ether's spot and futures markets to prevent market manipulation. However, challenges persist in satisfying SEC requirements, particularly regarding the maturity of Ether's futures market compared to Bitcoin's. Ultimately, the fate of Ether ETFs may rest with the courts, as legal victories against the SEC have paved the way for the approval of spot Bitcoin funds. While industry experts anticipate eventual approval, potential legal challenges may arise if regulatory approval is delayed or denied.
Before we continue, please remember to smash the like button and subscribe to our channel.
In other tech news, Apple faced a hefty $2 billion fine from the European Union on Monday following an investigation into allegations of anti-competitive behavior that favored its own music streaming services over rivals like Spotify. The European Commission, based in Brussels, also directed Apple to cease blocking music streaming apps from informing users about cheaper alternatives available outside of Apple's App Store. The fine, larger than anticipated, marks the first penalty levied against Apple by the EU and prompted a decline in Apple shares by as much as 3.1% in New York, reaching their lowest level since November. Margrethe Vestager, the EU's antitrust chief, stated, "For a decade, Apple abused its dominant position in the market for the distribution of music streaming apps through the App Store." Apple has expressed its intention to appeal the EU's decision, initiating a legal battle that could extend over several years. The company contends that regulators failed to uncover any credible evidence of consumer harm and disregarded the competitive nature of the market. Despite the EU's actions, Apple continues to thrive financially, reporting substantial revenue of $119.6 billion in the first quarter, with a significant portion stemming from iPhone sales. Vestager has prioritized challenging the dominance of big tech in the EU through fines and regulatory measures. This penalty against Apple marks her third-largest fine for anti-competitive conduct, following similar actions against Google for its dominance in the Android mobile market and alleged preferential treatment of its own shopping service. The EU's investigation was prompted by a complaint from Spotify nearly 5 years ago, alleging that Apple's control over the App Store led to increased subscription prices for Spotify users. Apple's introduction of anti-steering rules drew scrutiny from the Commission, which deemed them unnecessary and detrimental to consumers' ability to make informed choices. The company's recent policy change allowing music services like Spotify to direct users to the web for subscription signups was not sufficient to address competition concerns, according to Vestager. The EU's crackdown on Apple's App Store coincides with the implementation of new regulations under the Digital Markets Act, aimed at preventing market abuses and ensuring fair competition among tech firms. These rules, effective from March 7, prohibit the favoring of proprietary services over rivals, data misuse, and restrictions on app downloads from competing platforms. Apple has challenged its classification under these new regulations. Continuing the focus on Apple faced a substantial setback in China as iPhone sales plummeted by 24% during the initial 6 weeks of the year, raising concerns about the ongoing demand for its flagship product. This decline occurred against the backdrop of a broader contraction in China's mobile market, which shrank by 7% during the same period. The Chinese smartphone brand Vivo, headquartered in Dongguan, emerged as the dominant player in the market by focusing on the budget segment, further intensifying competition for Apple. In response to dwindling demand, Apple initiated rare discounts on its online store in January, but even online resellers began slashing prices by up to $180. Consequently, investor confidence in Apple waned, with its shares dropping by 1.9% in pre-market trading and experiencing an overall 10% decline since the beginning of the year. The situation was exacerbated by a report from Apple's iPhone assembly partner, Hon Hai, indicating an 18% slump in sales over the first 2 months of the year. In addition to domestic challenges, Apple faced formidable competition from Huawei, based in Shenzhen. Huawei's Mate 60 Pro devices experienced a surge in popularity, fueled by patriotic sentiment, which significantly boosted the company's market share from 9.4% to 16.5% within the first 6 weeks of the year. Meanwhile, Apple's market share dipped below 16%, down from 19% a year ago, according to analysts. Despite Apple's efforts to stimulate demand through aggressive promotions, particularly in anticipation of Women's Day, Huawei's strong performance and enhanced production capabilities present formidable obstacles for Apple in the short term. This underscores the intensifying competition within the Chinese smartphone market and the challenges Apple faces in maintaining its market position amidst growing domestic rivals.
Please remember to subscribe to our channel. Thank you for watching.